Hey everybody. So today what we're going to do in this video is simply run through what happened in the stock market. There's a lot that took place today that you saw a lot of rotation, and we're going to get into it and what's moving and what's not. So let's just really jump right into it. As always, subscribe to the channel, click on notifications because what we go over here is extremely timely. I'll be going over everything in alphabetical order. And there'll be key levels and actionable ideas for those that are new. And we're going to cover a lot of what we covered pre-market live today too. So let's just jump right into it because there's a lot of ground and we're going to cover it pretty extensively. So in regards to Apple, we're in the newsletter here at 127. I mean, for me, I gave up after it ran into up here. So, for the $3-4 that's left, I mean, see if it closes on the 200-day, but the way this is rounding, the only thing that I'm wondering is if people are getting out because they know that the comps from last year are going to be higher. I really don't know, and I don't trade on fundamentals. I trade on technicals. So if this closes below the 200-day, become concerned that this may be setting up for something much larger of a move down. You can argue this is the left. This is the head. This is the right. You can make that argument. I'm somewhat surprised that we're rallying and the single largest tech company is not rallying. Someone did mention it. It does have a $2 trillion valuation, and that might have something to do with it. But just be aware of it. It's really gone nowhere since October. If you really take a look at this. Right, you can even go back far and say it's gone nowhere since last August. So just keep that in mind. Maybe it's getting tired, but it's not acting right after that last quarter. So from here, I would not be a buyer. And if it breaks the 200-day for the newsletter, I'd be out. So AMC, we're going to spend some time on today solely because we can go through and look at smaller charts and show you how to find entries for your own ideas, right? Which is something that we try to focus on here. I try to get people to understand. I try to get people to understand that they can do this for themselves, find their own ideas, become better traders. That's one of my goals, to help people literally become the best that they can at this. That's why I do this. And the way to do this is to educate, not just tell you, buy this, do that, look at me, aren't I smart? Like it's a waste of your time. So, let's get into this. So I was pretty clear in the pre-market what I thought was going to happen, and we can see what happens if you throw in the pre and post data. But let's leave that out for a minute because it's more poignant this way. So here we open and here we close, okay? Everything up here was completely rejected when we found out today that the person that was bought the stock at 27, who took this huge position at 27, right, decided to sell the entire position when it opened up here. So essentially, he took down this huge block of stock from the company, and then everybody in retail bid it up for him up to here, and then he sold it, and we're estimating that he made somewhere between $40 to $50 million on a $250 million investment in less than a day. So this was clearly, from a fundamental standpoint, it's clearly a pump and dump. I mean, it's blatant, and I don't know how this doesn't get looked into more. But let's not dwell on that. Let's dwell on what do we do with this here, and then we're going to get into shorter time periods on this and show you how I traded it today, where I went long, where I went short, and you can look at the timestamps on Twitter to see exactly what transpired there. So, when you see what's happening at this level, you're just hanging right where you opened. I don't know that we're going anywhere here. To me, this is a long-legged doji, and it symbolizes a reversal of trend. Until I know otherwise, that's what this tells me. So just so we're clear, this little thing lying right here in the middle is the body, which is very, very small. It's not at the top. It's not down here. So for me, when it's this tight, I construe it as a doji bar. And this is one leg and this is another leg, right? And they're both fairly long wicks on both sides. So referring to it as a long-legged doji simply means that is a reversal bar. So until this bases, right? So until it goes like, and I'll draw this line because it'll be fancy, right? Until it does like this and bases, I have no interest and trying to figure out what it's going to do, right? I got to see it base and then figure out what it's going to do. Or I can see it go like this and then take out this high, test, right? And then go. It could do that, right? Let's get rid of this. Or just finally, it could, come down here, test, go, and then after we hit here, then drop down. So for me, there's too much uncertainty on what can happen here, right? You have no edge buying this whatsoever. Your only edge is that your buddy's telling you that you have an edge because it's going to 100,000 and it's going to be a $50 trillion company for some reason. So that's not going to happen. So just to be clear about this, you need to watch this and see what's going on. These are your key levels. It's really, I'm going to make it very simple. Okay. That's your key level. That's your other key level. That's going to determine what happens with this stock. If you break this, you're going to retest this level. If you break 33.5, you're going to retest 36. They're just pegging it to key levels and shaking people out one way or another. So if you break this, you're probably coming back down to this breakout bar area. You're at least coming down to $21 in my opinion. So if you break this, there's a lot of downside here. Keep that in mind. But now let's go and look at this today, because I threw a lot of these out there and I just want people to understand why. So what we're going to do is get rid of the indicators because I didn't use them. And we're going to get rid of, actually, let's get rid of all the horizontal lines. And let me show you exactly where we did the trades. So, all right. And this is going to give me, that's what I'm looking for. Okay. So if you take a look at today, okay, this was your open right here, right? And I'm going to go into something a little more, trying to get you a little more detail. This is what I'm trying to get to. So this is just a 2-minute chart, and I used a 1 minute to trade it, but we're going to I'll do it off of this. See how you open here? And that was your open. And then you gap below your opening bar. That was it. That was your trigger. So you're here off the open, and then you gap lower than the open, right? And you have a huge overgap on your stock. That was your trigger, right, to place this trade on. Now you could go and look at your volume, which I saw as coming in as pretty substantial, but that was simply your trigger. And then I just let it trade down, and as it traded down, what did I do? I moved the stop down to my break even, right? Cut half down here. Traded back up. My stop was here, came back down, retested, and then it rallied again. And then when it started to rally again, I got out. Okay. That was it. That was the trade in a nutshell. And it was based upon price recognition and price patterns and testing certain levels. I did get into this, as people know, on the long side, and I got into it here. And I'll walk through exactly why I got into it here. So here we are at this level, right? And then we just bust right through that. That was my trigger. Again, it was that simple. Now, as this traded up, I reduced a third of the position into the strength when it happened. And I moved up my stop on the rest of it, not to break even, but just right here, right? So 31.50. So when it shot up and then came back down like that, that was it. I'm out. Trade's over. So I reduced my risk by covering a third on the rally, right? So I lost, let's just say I have to figure it out exactly, but I think between here and then the slippage of buying, I didn't get until 32.40 or something. So let's just call it $1 here, right? So I lost, $1 here, and I made $1 here. Right. But I was only on a third of the move. So I lost, $1 on a third of the position, essentially, is the way to take a look at it. Right. So doing things like that, you don't always have to be right. You just have to have the right money management skills. I could not have bought this at a wrong time. But if you looked at this chart from here, right. Well, I don't want to go over there, but if you looked at this chart before this red bar, right, you clearly would have said, man, this is going higher. And then that news comes out that, essentially it was just that them buying that stock was essentially just a scam. And, that's really, that's very unfortunate, but it happens to the best of us. And you just take your licks and you move on. You don't ask, like when it's breaking there, you don't ask why, you don't discuss it. You don't talk about the seasonality. You don't look at the RSI. It hit your level. You get out and you fight another day. I can't make that any clearer. That's how you trade. So that's how you invest. You're always protecting your capital, always. So this is, let's just go through this one because I don't have this on there. And if you find this helpful, do me a favor and just click the like button, because the algorithm, that's how I get in front of other people. And my goal is to get in front of as many people as possible and show them what it really takes to be successful doing this. So APP, okay, what happened here? Well, this is very, very not good. And we're just going to walk through it. So you see these key levels I just marked? Okay, why is this key? Bonk, couldn't stay above it, couldn't stay above it, stayed above it for one day. Couldn't stay above it for even a day, right? You see the difference? Like this one, at least it was trying. So this is somewhat of interest. This probably aligns right in there with the rest of them. Yep. So this is just one big nasty area for the stock. And we looked like we were going to break out yesterday. And what happened? We didn't. Now, technically, this is not a bearish engulfing because we really don't take out this open. So the open here, right, which is 74.12, okay, is less than the 75.18 high and close over here, right, which was 74.31. So it's technically not a bearish engulfing, but that's about as ugly as you can get without being a bearish engulfing pattern. So to me, the fact that you can't even close above any three of these levels leads me to believe this is going to pull a path. And we remember what happened with path, and I'll show you that. So I'd be very cautious here. You have no support whatsoever below you. There's nothing there. I mean, your next levels are really here, right? 62. I mean, that's really 63. I mean, that's really your support. You could make the argument that you have some support in here, right? 68.55 where it lied. So very simply, if that's what you're saying, then what you would just do is use this wick. And if you break that wick, realize that you can get to $63. Throwing in the indicators does absolutely nothing. Hasn't been trading long enough. But when you have a reversal like this, be careful. And I'll show you path very quickly. Remember when we did this and we ran up and then we hit it again and we couldn't break it? And then we had the inside day, then we hit it again and couldn't break it. And when we opened in this group and then we went up, for those that have been following along, what I said was, you're going to break down. Right? You're going to break. Now that you're in the middle of this group, chances are you're going to break to the downside. And that's exactly what happened. You opened right here, right? You gave you that look like you were going to run again and then reversed and came down. So for all intents and purposes, you cannot be in this. This is really telling you absolutely nothing. Now, you can't. So, but if you look at today, I mean, you just have a long-legged doji. You have no idea what this is going to do. No, I don't know how you could look at this and make a determination on what's going to happen. The only thing that you can argue is that you have a little bit of a trend right here, and maybe you'll respect that trend. But I don't know the answer to that. I mean, you could argue that you could argue this right on path. Let's get rid of all these for a minute, and let's get rid of these now. We don't need them, and we'll get rid of you as well. We might as well do path while we're here. And I know it's out of alphabetical order, but what the heck. Right? I mean, you could make this argument, right, that you have a megaphone pattern going on, but megaphone patterns to me are a pain because how do you quantify your risk on that, right? I mean, there's just entirely too much risk. So, in regards to path, I would avoid this until it tells you what it's going to be when it gets bigger. Right now, it's not telling you anything. APPS, I'm going to go over because we came out with earnings tonight, and it's acting like it's all over the place. So I just want to give a couple key levels for it. So you can see how we've been rallying and rallying and rallying, throw in the indicators, and how the 21's starting to point up. And you have to get above the 50-day. Once you get above that 50-day, you could start looking at it again. Until then, I would not go near this. And I certainly wouldn't buy it first thing tomorrow until you see what happens with earnings. If you look at what it does on earnings, whether their earnings for the past 3 quarters have been stellar, but let's just look. I mean, if you take a look at how they've done, you've exploded up here. You sold on earnings here. You exploded up here, right? So you just don't know what you're going to get tomorrow. So just watch it and let it develop before you do anything. But really, you need to get above this 50-day. You haven't even made a higher high yet. People could even see this, right? And there's a lot here, and there's even another trend that's coming down here. So just be careful with this. This is not something that you need to jump into right away. So just give it some time. BB worked well for us today. We left these levels in from before. Let's get rid of everything now and just look at this and start fresh. Okay. So we talked about this today, and we talked about, that this was on the list. We talked about it this morning and how this was on the list for, possible movement pre-market, and it did pretty much what we thought it would do, right? You are closing right about, or you opened right about what, 11:19. I think after hours we're up even more. Yeah, they're running it after hours. I mean, they're going to run this right here. They're setting to gap this up tomorrow. And this is really your level that you want to watch. 1252. I mean, that's really the level that you want to watch now. If you get above 1252, even after hours, if you're trying to play this, that's not the worst idea in the world. Because I just think they're going to gap it up tomorrow. I mean, it's got that feel to it. So keep this on your radar. I think they're going to start rotating out of the ones. This is my thought on it. I think the retail people that are driving some of this are going to start realizing that they're being played. I mean, they've been being played, but they're going to get out of some of this stuff. And I think they're going to rotate into ones that could push like this. You're going to go and find ones that people aren't thinking about. And they're going to just move faster and faster. They're going to get quicker with it. I think that's what's going to happen. So let's see what goes on here. BGFV. So let's get rid. We had all these levels marked. And we're going to get rid of all these horizontal lines. You broke this wedge right here, which is what you were looking for. You were really looking for that wedge break, and you got it, right? So let's get rid of this line, and we're just going to put this right here. Put that one in. Then you come here. You try to break out, form a little wedge, and you're trying to break out again. What you'll notice about this day, and this is pretty important stuff, you ran right to this and you rejected. This is simple. Your pivot now is the top of this bar. So 33.27, so 33.5 would be what you're looking for from a pivot gap. If you break that, it could continue to go. There is a large channel here that could propel this higher. I like this trade. I like how it's been basing and building and not really coming down at all. As a matter of fact, it's doing the exact opposite, isn't it? These moving averages are just opening up and opening up. So this is telling you that it's probably going higher. And I would definitely keep this on the list to watch. I like this trade a lot, but you look for 33.5 to get above there. So Bumble, I wanted to go over. A lot of people ask me about this. We went over this red bar strategy yesterday for people that are bottom fishing, and this executed on it Friday. And I thought that I went over it. Perhaps I didn't. But so you could see how you cut down here and you have this trend that you followed, right? And see this red bar down and all this volume. Okay, usually when you get volume like this, which is this exhaustive, meaning everybody is just like, that's it. I've had enough. Get me out at any price. I've had it. When you get to that point, there's nobody left to sell, right? So when you see huge sells like that, just like how you see huge buys like that, right? What are you going to do about it? Well, you got to realize that you can't have 5 days like this, 3 days like this. There's just not enough volume. Now, that doesn't mean that you're going to bounce and go back up right away when you see these, but it means that you're getting darn close to bottoming. And that's exactly what happened here. Okay. You came down here, bounced around, tried to rally, failed, came back. And then when you get through it, right? And you got through this higher high. That's all you needed. Now you got over this red bar. And if, for those that have been watching, this red bar, this is significant because essentially what you have here, and let's get rid of these indicators. Essentially what you have here between this bar and this bar, before this breaks out over here, is you have a flagpole with a bear flag. And then it breaks up over the flag, right? So that gives you an indication when it does that, like, oh, geez, maybe the bear flag's going to fail. Once you get through the top of the bear flag, which you have now done, it is a clear rejection of that flag. So that's what you know right now. That's all you know. Doesn't mean it's going up. Now, if you take a look at what you have above you, right? You have this up there, okay? And you have this here, okay? And that's where you're sitting. You're sitting right on this. And on the second one, you've rejected twice now. You opened on it, popped your head up, got knocked down, came back down to here. So you need to get above this wedge line before you do anything. And now let's throw those indicators in. Let's get rid of these events. And that tells you what you're looking for out of Bumble. So the easiest way for you to remember where your swing or pivot is going to be the top of this wick on the green bar, which will get you to clear this level and stay clearly above your 21 day. And there's nothing in here to stop you really until you get to this 58. Except, you could hit the 50 day or this trend line, right? So that gets you about $56. I do like that. I threw this out there on the top 10 list for Saturday. I still stand behind it. I think we did okay here. I mean, I don't really think there's a reason for us to, to look at this and think that we're not okay. Now, would I like to see better action? Sure. But it's been doing this. It's building. Look how tight this is getting. This is not going to last. You don't go from massive runs to, 2-point moves on a stock. But if you look in here, you're wedged. That's all. You got to the 209.50 and they rejected it. It's not a big deal. So let's just see what happens with it. But I still like it. I think it'll run. CHPT. Someone wanted me to go over and I didn't have time this morning, or it just got lost in the milieu. And let me just throw this out there while I have everybody. Hopefully I have everybody. Between Twitter, Reddit, the emails, and YouTube, I'm rocking at like 300 emails and contacts a day. I try to answer everybody, but if you fall by the cracks, just resend it. And when you're in pre-market, it's easier for me to, instead of trying to scroll through the feed and stay with it, just resend the symbol. If you don't get an answer to your symbol within 5 minutes, just resend the symbol. It's easier for me than to scroll up and see what I missed, because I have very limited time in the morning for obvious reasons. Pre-market because of the trading time. But CHPT, I just wanted to get that out there. So, I mean, it's not like I don't want anyone to think that I'm trying to be neglectful or whatever, or just dismissive. It's just becoming a lot. I mean, I enjoy it. That's not what I'm saying. I'm just getting to the point of time-wise for me to go through it all. It's a lot. So CHPT, see how you broke here? That's what you wanted to see, right? But look at this. Let's get rid of these for a moment. Just look at this. Does this look like something that you would want to run into right now? Not really. And here's one of the things that you'd want to see. You really want to get above a level like this. You want to get above a higher high. You have gotten above one higher high and then rejected it. It's very rare that happens. Very rare that happens. And then you have this level here. So what are you going to do about it? Well, from here, what we're going to do is we're just going to sit, watch, and wait. But I would not be chasing this until I get above 27.64. If you are heck bent on doing it anyway and saying, yeah, that's great, but I want to be in now. See how it broke above that 200 day? So you could literally buy this and then use the low of that bar as your stop, right? Because if you break the low of this, you're breaking this. I mean, you're not going to just stop, right? So you could do that trade that way, but it's not really confirming. It's just above the 200, which is good, but it's not, overly confirming. So CPE had a big move today. You see the volume spike right here? See how you're wedged in right on these lines? You have this huge base between March and now you're bumping your head right against this. Look at this. This is exactly what you want to see. It's perfect. So get a higher high out of it and you have your breakout. But you need the higher high because you landed right on that line. See the line? Landed right on it. So you need a higher high to get through it. So let's do this one real quick. So DDD did exactly what we thought it would do. It just kind of sat there today. I really didn't expect much out of it after yesterday or the day before with the red. We just had more selling. Not really much to do about that. So I would just look at this and say, stay with it. There's really nothing to do. I mean, I was pretty clear that if you break that, you could get back down to 26.5. If I get to 26.5, I'll be buying more of it. I like it. I do. I like that position. You don't need to chase that here. DPST, don't be surprised if you see this on the newsletter tonight. And I'm going to get rid of these lines. They're bothering me. So what I like about this and what's transpired is I am finally above this line. And I'm heading to get above this line. So really what I'm going to wind up doing is I'm probably going to use this point, right, as my buy signal. When it breaks this point, that's going to be my buy signal. I don't need to wait for this anymore because as time came down, the trigger changed. So I'm going to look for it here. I think this has extreme potential for being regional banks in a 3X ETF. I think the potential for this is massive. And I've been saying that for some time. So if we just take a look at this on a monthly basis, you can see that this 275 level, which we are now above, we are setting up to just start taking these out month by month. In 2 months during this period of time, just to put this in perspective, okay, this was $495. It's at $280. So this has really good long-term perspective on the monthly. You can see how this is curving. There's a lot here to like. So, but it's somewhat volatile, but it's setting up here, and I do like it, and I do think you should consider it. So, and here you are in the weekly. You can see what I'm talking about. There's just no resistance, very little resistance at all. So, and it trades with KRE, which is the underlying index, right? Which just looks fantastic, right? I mean, just looks absolutely fantastic. You just need it to move, and it will. And I mean, just by the way these lines are all going and how the 50 is going to cross the 200, and this is going to move. And I do think that. So consider it. Ford, I would not be surprised to see this in the newsletter after what it did today. So let's just focus on this for a moment. Let me just get to it. I don't know why that's doing that. Let's put this over here. Maybe that'll be better. Okay. So see how you didn't break the lower low and you just held right in here? The chances of this breaking that lower low now have gotten a lot slimmer. This is actually getting tighter in the flag. And that's very surprising. Usually what you see with something like this after a bar like this is you'll see a down day and you'll retest like 12, 13, 1390, let's say, right? We didn't do any of that. So, I mean, my thought on this is simple. You can buy it up here or buy it on a higher high. I think you're going to break this level. I really do. And I think it's going to happen faster than people think. This 1362 level is pretty much your stop. But the amount of people that are catching on to what they did with this Ford F-150 on the EV side, I watched a video on it, and it's amazing what they did with this car. And it's something that you need to pay attention to from this standpoint. Like they're at a $20,000 differential on their price point versus their competition. And we can talk about the bells and whistles and the differentiation of it. It doesn't matter. It's $20,000 less than their competition. So I know people that were going for one car. Now they've switched to go for the F-150. So they're setting themselves up for a complete fleet change for this F-150. And they're going to get it. I really believe that. So no one's going to be able to come close to them in this market. And everyone's going to want to own, every contractor that I would know would want to own this truck after watching the video. But that's neither here nor there. Let's talk about the chart. The fact that we're getting tighter up here right against this level and we're not even coming down the break, especially on a day like today with light volume, is very telling. So I am very comfortable with this. I would not be surprised to see this in the newsletter now. You can see how you have, get rid of these indicators. You can see how you broke a 21-year downtrend, right? And what did you recently do? Broke a higher high. Okay. So on the monthly. So it's really big stuff. I mean, you just broke a 2-year high here. You broke a 21-year, 2-decade downward trend. This is setting up to go, and it's setting up to go a lot higher. So, I mean, you're at least getting the $17, $18, but I think that you're heading back up for, back in the 20s. I think that's going to happen. So just keep that in mind. It's definitely something to consider. JMI, I really like. I think JMI has a lot of potential. And we went through this one today, right? But look at how we acted. Let's get rid of all these lines. Okay, so let's throw these indicators in for a minute because this is important. See, look at this. You hit the 200-day, you hit the 50, and you close above both of them. Like, this is exactly what you want to see. The only other thing left for this to do to confirm is to get above that 34.25 level like we talked about. But is this actionable here? Depends on your risk preference, right? I mean, that's really what it depends on. For me, sure. But I don't mind taking a loss. And I take my losses quick. For those that follow me on Twitter, they've seen that. But what I'm getting at is this. If I took out this lower low, the move's over. You're done. As fast as I got out of Ruby the one time, for the people that watched me do that trade, that's how fast I'd be out of this. Like, if it breaks that low, there's really no reason to be in it. Take your loss, move on with your life. But if you get through this 34.18, you're going to start taking out levels. 40 is going to be your first level. Then you're heading back here. Like, this gets really very interesting very fast. So I could see the interest in this. You get a higher high tomorrow, and you will see buying come into this name. There's very little doubt to me. So you're looking for a higher high tomorrow, and then go from there. Muds, we were in this position here. We took a $2.2 gain. Remember when we broke down through this, and then, well, if you followed me before in the newsletter, you would remember that we bought this, and then it actually came in, but we got out. And just took our profit and moved on. It just wasn't going to work. So, but today's action is just awful. And I have to really look into why it did this, but I wanted to show this up there because they didn't do their merger yet. So I don't know if they're going to do the merger. I know that the people that bought the AMC position had a huge position in Muds. So I don't know if they sold that position in order to raise capital to buy the other position, right? And now they're going to buy this back. I really don't have an answer yet to that on what transpired there. Something happened, obviously, and you have a massive selling today, the most selling you've ever had in the name for no reason. So what we have to do now is we just have to see what happens. But for me, you can't buy this. It's broken. Here's your H, right? And you broke your H. So you really got to watch this for now. You could bounce back up to this level and get a trade out of it, but it's just dead for now. So be careful with this. I really like this name, and I really hope that it comes back and sets up again. NIO, I know everyone's getting excited because of the car orders today. My belief on this is that they're going to have a heck of a time competing. The more I see what's coming out. But, China's going to support China, and that's just a fact. The question doesn't mean that the stock price does well, but it's starting to lean that way. This is a pretty significant move. Now, what I like about it is this, and I don't have a position in this. I like how this is starting to curl up, and this is starting to curl up. The 200-day, we are now clearly above. The first trigger I had today was when it got through 41.90. I didn't do anything with it. And now you're heading towards that 43.13 level. I think you're going to break it. I think it can go higher. just on a technical basis, let's just talk technically and get through my, my garbage on what I'm hanging on to fundamentally, because like that'll cloud your mind, right? And that's not what I'm trying to do. I have my own bias, just like you have your own bias, right? And it gets in the way because you'll look at something and go, well, I don't want to be in like a Luckin Coffee, which is okay. And we can look at that, but how you came in one day and it just blew up. But what you'll see here is from here to here, right? Look, you break this, there's no reason you're not going to here. I mean, once you start getting through this stuff, there's very little reason it won't rally. So you just really have to look at it. For me, what would be where I would have possible interest, is getting through 43.13. Getting through a higher high here would be pretty substantial, because that would mean in the past week, I've gotten through the downtrend. I've gotten through the 21-day, the 50-day, and the 200-day. That would let me buy it here and like sleep at night knowing that I could hold it for a period of time and then it could go higher. That would definitely be something to consider. So OEG, there is very little I can tell you about this right now on what to do with this. This is without pre and post data, and this is with pre and post data. So if you look at this bar, I mean, there's nothing to do here. The move's over. So the only thing that you can do is this kind of trade. This is it. This is the only thing. See this wedge that's in here, right? 779, 526. The only thing that you can do is buy this breakout and do it on like a 5 or a 15-minute chart on a pattern. That's really it. That's your move. I mean, could it go higher? Absolutely, right? It's done it before. It's huge volume. But, to sit here and tell you to position build and stay in it forever, I'd be really apprehensive about that. I don't know what the news is, but I do know that this is OEG. And if I ever forget to type them, just FYI, they're up. They're not in this corner, but the name's here. You know what? I just realized that. So there you go. But really for me, let's make that a little darker for everyone. There you go. So really for me, you just have to watch those levels. Be very cautious of them. This is very hard to play. You really need to drill down on your time frames. That's the best way that I can explain it. Path we went over. I won't go over it again. It's a megaphone pattern. I really don't see a huge edge. PLBY sold down with MUDs today, which was just so fascinating to me because I couldn't figure out why. This one's going up, right? For some reason. Right? Did it go up after hours too? Yeah, it's up even more after hours. It went 2167 after hours after closing at 2090. So I don't really understand it. If I was going to collect something, I would want to collect something like the old Playboys or the Topps, the cards, MUD. So there's something going on here with NFTs that I don't understand. I don't think that market is going away at all. I truly don't think that market is going away. But I think it's going to have some growing pains and you're going to have some volatility. And that's what you're experiencing now. Every time it gets to this level, every single time it gets to 50, it does this. Like every time. When we thought it was going to break out here, it didn't. So just keep that in mind and we'll go from there. RBLX, I am not ready to do two things for the newsletter. I'm not ready to raise the target price. We got in at 78. We're in at, it's 97 right now. I just need to see a couple things and I'll probably raise the target price. What is really positive about this one? Okay, let me just go back to this for a second. I don't think I spent enough time on it. You got to be really careful here. Something's going on with this. I can't get above this level anymore. Okay, and I'm just forming this base. Chances are when I can't get above this, eventually I'm going to retest down to here to 38. So just keep that in mind. Let me get back to RBLX. So with this, I'm going to raise the target price, I think. When we break out here, I have to see what happens. But we just played this perfectly. Got in at 78. Our stop is now 87. The stop will be raised today in the newsletter. That's very clear that it's going to wind up being the lower low of this bar. I might even make it this one, but it's definitely going to be this bar. That if you break that bar, you're going to roll back into this channel. and everybody well, I shouldn't say everybody remembers, but if you roll back into this channel, chances are you go to your mean, and the mean on this one, I have to do the count. Usually if you have 200 or more days, that mean takes you to the 21 day. It might not take you to the 21 day. So it might take you a little somewhere else. Okay. And that, just looking at the stocks, this is why we're doing this. So this BBB is breaking that 1252. So this probably is actionable tonight. I may look at this and start building a position for tomorrow morning, just seeing how it goes. But obviously something's going on with it, right? See how it just keeps going. So they're gonna run it up. We talked about that about a half hour ago. But just FYI, this is setting up for a huge push tomorrow off the open. That's what's going on there right now. So if you take a look at, let's go through this. RBLX, I think that was pretty clear. So let's see here. Roku. Look, I like Roku. You're gonna build and bounce. I mean, that's what's gonna happen here. It did nothing today that would make me think that I have to do anything with it. Nothing. The only reason I brought it up is because it's in the newsletter and somebody asked about it. I think we're in at 347 on the newsletter. We're at 347. Nothing to do. SE. So SE continues to do one thing, right? What's it doing? Bumping its head right along here. Can't get above this old line, can it? And it just keeps bumping its head. And here's your swing right there, 261.55. Get above 261.55, you probably break 276 and head to this 300 level. That's probably what happens. And you're still in a base. So if you break out of that base and you come back into this, it could really go. But you got to get through 261.55 first. That's your key level there. Snow. The best thing I could tell you about this is it did this today. So this is a gravestone and usually means the trend is over, right? But it was Friday in light volume. Well, today we opened and closed above the open and close of the previous day, which is bullish. So essentially, what am I doing? I'm building a flag now right below, right? My resistance. It's not the worst spot to be. So watch it and see how it goes. But if you truly wanted to play this and buy this, you'd have to use the top of the flagpole right now as a breakout bar, right? And use that as your pivot. And that can go higher. You can get to 325, 330 if that happens. You could see that happen. 10 we did today off pre-market. Hopefully I was vocal enough for everybody. If not, I don't know what to do. But when you are above these lines and you're above these trend lines, and especially when you're wedged like this, you're just setting up. You gapped open, and that was it. Your gap was the low. Your close was the high. I don't know what we're doing after hours. Yeah, 1861 versus 1868. Yep. So you just keep that in mind, okay? It's really that simple. Now, I pointed this out today on Twitter so people could understand this, and I'm just going to walk you through it. If you just used a simple metric of I'm not selling till I get one lower low on a 15-minute bar, right, as your stop, and you use that as your metric, you didn't get out till here. Right. So maybe you didn't get the whole trade, but if you just bought it as a day trade and that was your metric, I will wait until I get one 15-minute bar below a lower low. You never got stopped out today and you were protected the entire time, just moving your stop up. So something to consider. I do like this. Hopefully I was vocal enough for people. I know some people got into it because they thanked me today. But once you got through that 1629, that was it. You're going to 20. You're going to 21 and a quarter. I'll be shocked if you don't get up to here because look at this. Look at this volume. This volume's sick. Like this is not going away. So it's just my opinion, but it's not going away. Zoom we're going to do in a moment, and it looks like it finally did what I thought it was going to do and went green. That's good. So TIGR, yes. I understand why people are excited. Now give me a close actually above it, not on it, and then we'll talk. But it has done 20% from here, right? And I still had no interest. And I understand why people have an interest, but I'll give you the low, 27%. So I like it. I understand why people like it. It did finally break today. It did finally do this, right? It did finally break this downward trend. It did get above this, and it's doing what I really want it to do. And I'm glad it's doing it on a short week. But if you close above this level on the weekly, you'll have my attention. Now I might not get that, right? I might get another move, another power move up, and then it's up here, and then I can't really utilize this anymore. And if that happens, then I'll just go into the next trade. But every time I buy this and Futu, when they break out and they start running, they get rejected. Now, eventually that won't happen, right? And usually it's the second time that it doesn't happen. So here's the first time, and then there's the rejection. And now here's the second time. So the probability of this rejection is less, right? I mean, one of the key levels a lot of professional traders actually will do is, let's say they bought this breakout and it failed, and they just wait for it to come and try again. The second time they actually increase the bet because the probability of their trade working is greater here than it was here. Something to consider. So to answer your question, for everybody that loves this stock, that keeps teasing me because I keep telling you to wait and wait and wait, I'm waiting for technicals. It's not personal. And it has done that today. It has broken this level and it has broken this, but I just don't see the need to just jump in there. There's too much. I mean, I'm showing too many other stuff that just looks great. But if I'm above this base and you have to use technicals, and we talk about bias all the time, right? And you can see how my bias is possibly keeping me out of this trade, but I got to get through that level, and I'll take a look at it. I'll probably buy it. UPST, nothing. What's it do? Longer red bar, shorter red bar. What happens after? It takes out a high. Longer red bar, shorter red bar. What's it do? Pops up. Longer red bar, shorter red bar. I mean, these patterns are everywhere. Longer red bar, shorter red bar runs. I mean, I say this all the time, and I'm not joking when I say it. Stocks have personalities. You know who they trade like? They trade like the people that are trading them. Okay. So they develop these personalities, and you can look at them. And the people that bought this, they got exhausted, right? They got exhausted up here. Remember, there were people on Twitter talking about popping bottles over the weekend and everything else. It's going to be awesome. And then what happened? It went from 171 to 148 to 144. They lost, how much in 2 days? Now, I know traders that won't even go near this now because of you're taking 16% swings during the day. To me, that's exciting. And not exciting like I want the rush, but what it means to me is that you have a battle going on here. And I think the battle is going to be to the upside. I really do. When you have growth like this and people are rejecting it and selling it and getting nervous, I've seen this happen with Google. I've seen it happen more volatilely like years ago with Tesla. So I do believe this has potential, significant potential to go higher. If you remember even this, so let's just get back to this before I do this, and I'll show you what I mean. But if you look at this, you break above this higher high, everyone and their mother is going to buy the stock. Like everybody is going to want to be in this name, right? Because they'll be like, oh, I'm going to miss it, right? I mean, you were just setting up here. So it's really that 155. I don't care if I stay here for all week and build before I go higher. But every time it goes higher, I'll trim. Like today, you know what? And I did get asked to do this, and I'm glad I remembered, but let's just do this. And that's part of what happens when I just do this off the cuff. I was just giving points on where I was buying this today and what I was doing. So here you are off the open, you broke, and then you ran, right? And then I showed this on the hourly. Okay. So this was my hourly chart. And look at this, right? So I came right down to here, and this is one of the levels I said I'm buying at, right? You can go look at Twitter. I'm like, okay, I'm buying this. I opened, I tested this line, and then I went back over the open. See how you can use these patterns on different time frames? And I'm like, all right, I'll give it a shot. And then if I get stopped out, here's my risk. I lose $1 or $2, right? Because you're going to lose, you say you're going to lose $1, but you're not going to lose $1. You're going to have slippage, especially on a name like this. You're just going to have slippage. And that's exactly what transpired. And what did you do about that? Or what can you do about that? So not a whole heck of a lot, right? But it is what it is. And then when it traded back up and broke out of this wedge into that strength, why people are buying it, you can look at the timestamps. I trimmed that position that I started down here, right? And all I'm doing with it is just holding it, moving that to my cost. I think it was like 138, something like that. So that's all you're doing, right? That's the move. So it's not buying these breakouts, right? You set up these patterns and you learn how to draw these patterns, and then you just kind of go from there. That's how you make money. That's how you become consistent, because you have a process in place, right? I lose $1. I talked to a gentleman today who's like, oh, I'm in at 152, and I think he ran it down 10, 15 points. Well, okay, if you're trying to make 3 to 1, 4 to 1 on your money, that means that you have to hold the next trade for 30, 40 points. Like, that's fine if that's how you want to trade. Go for it. But understand that you're looking at week kind of moves, weeks, not days. And that's okay. I mean, I put positions like on that all the time, but just understand what you're doing. It's really important to get that. And a lot of people are missing that because last year was so easy. So what I wanted to say was this. So let's go back to this and use a weekly. So when this first started, right? When this first started coming out, you had weeks, like this is when it came out in 19, right? And then the pandemic hit. You had weeks where you would just go from, you can just see this. This is 160, right? 129. Okay. In 1 week, you went from 160 to 119, 114. Okay. In 1 week. Okay. 29% in a week. Now look at this day. 21% in a week. Okay. 1 week. Look at this. 14% in a week. So what I'm getting at is when you have a huge growth stock, like a huge one, expect extreme volatility. And that's what I think is happening with this UPST. I really believe that. So I think that that's what it's setting up for here. So this ZIM, and just in regards to this, let's look at the daily. Please comment which one of these you like the most and how I can make these videos even better. Tomorrow we'll be doing another pre-market show. I need to rally, and I got to get through 347.40. It's really that clean, right? I'm above the 50 and I'm above the 21. It's exactly what you want to see. We haven't been above both of those since we had the meltdown back here in March. But you still are below the 200 day, so a lot of people are going to avoid that. But 347.40 is your swing trigger there. So that's it, everyone. I hope you have a great evening. If you need anything, feel free to email me or give me a call.